Hello guys, welcome back to my channel and don't forget to like, comment, share and subscribe. US stock starter turned lower on Tuesday, extending the decline to a third day on worries about the Federal Reserve's interest rate outlook. At 10:80, the Dow Jones Industrial Average was down 15 points or 5%, while the S&P 5000 was down 6% and the Nasdaq Composite was down 6%. The S&P CoreLogic Case-Shiller Home Price Index showed an 18% year-over-year gain in June, but the pace of the increase is slowing from previous months. The JOLTS job openings report for July showed 11 million openings, higher than the expectation for 10 million. CB consumer confidence was stronger than expected, than the expectation had been for a reading of 97. Investors have spent the last few days worrying about how aggressive the Fed will be in its quest to tame inflation. Before Friday's speech by Chair Jerome Powell, investors had seen a change. The Fed would slow its pace of interest rate increases. But after Powell said the central bank will do whatever it takes when it comes to inflation, the expectation is it will continue with a 75 percentage point increase. The next meeting for the Fed is in September, but and beyond its shares were up 7% in early trading as investors look forward to a meeting on Wednesday when management will explain its strategy. Twitter Inc. was down 1% after Elon Musk filed another letter explaining his reasons for canceling his 44 billion takeover offer. Oil fell. Crude oil WTI futures was down 4% to 92 a barrel, while Brent oil futures was down 4% to 98 a barrel. Gold futures fell 7% to 17. The U.S. publishes its latest report on job openings and labor turnover, along with another update on consumer confidence and house price. Those numbers will test the strength of a pre-market rebound in U.S. stocks as the market adjusts to the hawkish message from the Federal Reserve's Jackson Hole meeting. Inflation data for August to start to dribble out in the Eurozone. Ahead of the European Central Bank's meeting on Thursday, Exxon threatens Russia with legal action over its biggest project in the country, and the American Petroleum Institute updates on U.S. demand for oil and gasoline. Here's what you need to know in financial markets on Tuesday, August 30. The Labor Department publishes its job openings and labor turnover survey for July, casting fresh light on the strength of the jobs market. Recent jobless claims data since the end of July have suggested that the economy is still quite strong enough to allow the newly laid off to find work almost immediately. The ratio of vacancies to people unemployed is still at historically high levels. All the same, and any sharp drop in the number of new job openings being posted is likely to ring some alarm bells. The jolt is due to a 1080 along with the Conference Board Consumer Confidence Survey. Before that, at 980, S&P's monthly numbers on house price will show how fast the Fed's monetary policy tightening is working on the housing market. The New York Fed's President John Williams also speak at 1180. The annual rate of inflation in the Eurozone's largest economy looks to have risen further in August as food and service prices, coupled with much higher gas and electricity bills, offset the drop in gasoline and diesel prices. Data from a handful of Germany's biggest federal states suggest the national rate may have topped 8% last month. Analysts said even though the monthly price dynamic weakened considerable, a preliminary figure is due from the status at age 80. Earlier Spain, the Eurozone's fourth biggest economy, said price rose less than expected last month by only 1%, bringing the annual rate down to 10% from 10%. Okay guys, maybe that's all from me. Thanks for watching and don't forget to like, comment, share and subscribe.